All right, the recording has started. Please give me a quick heads up if you can still hear me, because last time it did not work for some reason. Yes, perfect, perfect. I can hear you. All right. Perfect, nice. Perfect. Perfect. All right, then we'll get started. Now, let me grab my notes right here. Let me see. I wanted to talk about two things mainly. And I wanted to go over again the third candle talk. So, third candle, how it forms, etc., what it should do, what it ideally should look like. And then I also wanted to go over again when price should move away and create a new value gap. And currently want to go over that in a bit more live as well instead of just the breakdown video. Now, I want to start off with Euro US dollar, and very simply said, I want to study price action first before we dive into the live section right there. So if we go over all the fair value gaps right here on a 4-hour basis and on a 1-hour basis, then there's one thing, and there's, well, actually two rules that we need to understand before we actually go over the live conditions right here. Where if we have a fair value gap, and by the way, this is fair value gap enrollment, but when we come into a PD rate, this does not necessarily have to be a fair value gap on its own. So it can also be a breaker, whatever it may be. So right here, I have written down rules, and the first rule I'll share with you right here. Let me see, let me put it on the screen. All right, this is the first rule when we come into a fair value gap and we expect a move away. If the first candle is a high, low close, then we can still sweep that and the next candle should continue higher or lower. Meaning, if we look at this price action right here, yes, perfect. This fair value gap right there, we come into that and we have a pretty high close on that candle. Meaning we assume we came into that fair value gap quite late, etc. We do not assume disrespect straight away. But then afterwards, we can still sweep this candle high right there to then continue lower off of that. Now, the next candles are quite important to understand as well, because the next candles, when this is a down candle, we expect that almost needs to be a down candle. If that is not even a down candle, it is not interesting. Then of course, the lower it is, the lower this down candle right there expands, as in if it closes below the fair value gap, if it now closes all the way below those lows right there, the stronger it is, the stronger the rejection of the fair value gap is. Then the next candle should, in an ideal world, of course, create high probability or create an expansion phase right there, high probability expansion phase to continue lower and create a new fair value gap off of that. Now, what I wanted to mention here is that the rules we have are quite important to understand, because when price follows these rules, it is also a sign that we are indeed in high probability conditions. And when price does not follow these rules, then simply said, we are not in high probability conditions. So you also don't really want to trade that in the first place. So it's a perfect condition, perfect rules to sort of get price to demand a lot of price, which is very important as well. Now, the next rule, because this is only the first one, is this one right here. Let me copy and paste it again. All right, this one. If the first candle is a rejection, then the next candle should continue higher or lower. So if it's a bearish fair value gap and the first candle that comes into the fair value gap already is a rejection, then the next candle should just also continue lower off of that already. So what does that look like? Well, if we now go into these conditions right here, this fair value gap right there, and we have this down candle right there. This down candle already rejects off of the fair value gap right there. So the next candle, the only solution or the only possibility here for high probability conditions is that we now continue lower on the next candle. Now, we ignore the sweep because there was also quite an interesting trade on itself, but not super relevant right now. The only thing relevant right there, if we want to continue lower, is that this should be a down candle as well. It should not be an up candle. And if it is an up candle, then we are heading towards a higher premium rate. And that premium rate is again not the fair value gap anymore, because the fair value gap has already been traded into, has been basically is currently a mitigated gap. So that's not something we can use anymore. So that is what we would want to expect when we come into a fair value gap and the candle already rejects. That's the same for this fair value gap sitting right there. That fair value gap is when we already reject right there on that first candle. So the next candle can only be a down candle. And that is very important, because if that is an up candle in any shape or form, if that is an up candle, then the only solution after that is to come into that fair value gap sitting right there. But that is weird behavior. When this is already such a big down candle right there, the only thing the next price action, next candle can do is also create a down candle. That is very important to understand as well. And if you move along with price, eventually we see the same thing over and over right there. We have this fair value gap. First candle comes into it, quite low close, right? We don't assume disrespect straight away. We can still sweep the previous candle low to then continue higher off that. But this candle right there needs to be an up candle. If that is also a down candle, and if the close is below this low right there, then that is not interesting again. It needs to be this specific formation right there in order for it to actually be high probability conditions. Then the next thing is, this next candle right now should also be an expansion phase, ideally, if it wants to create high probability conditions. So this right here should now close with ideally quite a high close, so we create an expansion phase and a new fair value gap potentially that we can continue higher off of tomorrow as well. Then, if we dive into the 1 hour to look at it a little bit more specific, let's see. What are we seeing right here? We are seeing, well, I first want to look at this price action sitting right there. This price action right there. We also have this fair value gap right here. And we see the same thing over and over and over. Where right here, once we come into this 1 hour fair value gap right there, we already reject. So the next candle, we just expect the next candle to also continue lower in that direction. Then this 1 hour fair value gap right there, well, this would be arguably, I would argue right here that I could expect at that moment in time, since I do quite like the rejection already off of the up candle that we have right there, that the next candle should be a down candle, but or at least already continue lower. And I wouldn't necessarily expect a sweep at this moment in time based on that candle, since it's already quite a rejection. But once we do sweep it right there and we have a nice close below that high again, and it is a down candle, then I still expect lower prices right there. Where the next few candles should just create expansion phases of a new fair value gap. Everything here that is being discussed when we expect a new expansion phase, when we expect a new fair value gap being created, off of which candle, etc., it should ideally all happen as fast as possible, because high probability conditions happen as fast as possible. And that is important. It should not take ages for it to continue higher off of a fair value gap. For example, this one right here, this fair value gap right there. It takes this candle after it creates this up candle right there, then a new down candle, new up candle, then we trade back into it right there. After this candle fails to continue higher, and by the way, it takes context highs as well right there, which is quite important because now we're respecting premium raise, then right there, this is where I would stop trading. So it's recognizing as early as possible when we are not in higher probability conditions anymore. And these exact rules that we went over is a higher probability condition. And when we demand that of a price, we will only trade in very, very good conditions as well. So if we now take a look a little bit closer to live price action, then we still have this 1 hour fair value gap. And in order for us to be bullish, because this is quite a heavy retracement, in order for us to be bullish, what do we want to see? Well, we would want to see bearish low probability conditions. So on bearish fair value gaps, we would want to see the exact opposite of the rules that we had. So for example, We do not want to see a rejection of a fair value gaps right there and next candle continuing lower. We would not want to see the sweep of the first candle right there to continue lower off of that. No, when we come into those 1 hour fair value gaps, we would want to see, all right, a rejection can happen, but the next candle should ideally be an up candle, because then it starts to disrespect the fair value gap slowly, and we don't have that intention to continue lower. So what we demand of a fair value gaps to see high probability condition price action, if we do not expect or we do not want to see that fair value gap hold, then we want to see the exact opposite of those rules, of course. So right here, eventually we create new fair value gaps right there. Now this new fair value gap, how do we go about this? Well, I would argue right here that I would want to see this next candle be ideally an up candle, because this has already been rejecting very, very, very nicely right there. So ideally, the next candle should be an up candle right there. And when it then sweeps those lows right there, that is quite weird. That's something we saw last week actually on US dollar JPY. And that is price action overall that I do not really like to see, because then it becomes a sweep of a sweep of a sweep. And in high probability conditions, again, we can sweep it once potentially, yes, but the next candle should just continue higher, create new fair value gaps higher off of that. And that is the most important part. So if we dive into the 15-minute right here, then if we do want to continue higher, what do we want to see right here? Well, we have a bearish 15-minute fair value gap right there. And that bearish 15-minute fair value gap is where we would not want to see the rules play out. Meaning that right now we would ideally see a down candle. We already had a nice rejection off of that candle right there. So the next candle in an ideal world should be a down candle. So when that is not a down candle, that is when we can actively still look for longs, because we are not respecting those bearish fair value gaps. So let's get some more clarity and let's dive into lower time frames to see how we can potentially look to trade this. Well, if we trade back into this 5-minute fair value gap right there, which we can potentially continue higher from, then we would want to see the exact things we talked about, those exact rules. If we come into that, then the first candle, if it's a low close, we can sweep that low to continue higher off that. If the first candle that comes into that fair value gap is already rejection, then we should already continue higher off of that as well. That is very important. And you can see right here, when we come into this previous 5-minute fair value gap that is sitting right there, we can see that we tried to continue lower, as in this first candle sitting right there already was a rejection. So next candle ideally should continue lower off of that as well. Then eventually we sweep again that high, and then we try again to continue lower, not creating a fair value gap lower, not creating a fair value gap higher there as well. This is indication that currently we are in a consolidation and we need to wait for clear fair value gaps. But it also tells you that if we constantly sweep highs inside fair value gaps right there, that is also an early sign of seek and short conditions and just low probability conditions in general. So the reason I'm telling you that is because it's quite important to demand almost picture perfect price action from price, because if you do not have that, then likely it's a sign of low probability conditions. And if we ignore those signs, we are going to get caught trying to trade price action like this, which is of course not something we would want to do. So right here, what we want to see actually is ideally higher prices already. But if that is not happening, then we can't ignore the fact right here that we took out this low right there. We simply can't ignore that. And why not? Because this candle, based on the rules we had, this next candle should already continue higher right there. There's no reason for price to now come back all the way below that low. So if we do come back below that low, that is a great indication for you to now close your PC and close your laptop or whatever it may be and go do something else, because this is not something you would want to trade at that moment in time. And the only thing you can do right there is demand more clear price action again. And the way you demand that is simply by waiting for new fair value gaps going higher, new fair value gaps going lower again. Where currently we are seeing 15 minute is holding quite nicely. So if we want to continue higher, then we are not getting the good bullish signs. We are getting better bearish signs than bullish signs. So in an ideal world, if we want to continue lower right now off that 15-minute fair value gap, this candle should be a down candle. Where it closes is not super relevant. Of course, ideally a low close, because then we don't have a long wick at the bottom right there. But as long as it's a down candle, that's fine. Next candle should also be a down candle right there. If that does not happen, we lack momentum and we lack high probability conditions. So that is very important to understand. So if we take a look at previous price action as well, whilst this is playing out, we can see, for example, the 15-minute fair value gaps that tend to hold right there is this one. We come into it, first candle already rejects, next candle, up candle, up candle. And again, it should happen ideally as fast as possible, because that indicates high probability conditions. So this candle right here, fair value gap right there, first candle does not reject. So let's actually dissect this a little bit. First candle does not reject right there. All right, second candle can sweep the previous candle low to then continue higher off that. Next candle right here is where I would demand an up candle, at least an up candle, ideally create an expansion phase of a new fair value gap, which we can see doesn't happen. In a situation like this does also not mean we are necessarily automatically bearish here on the 50-minute, but what we need to understand is that this low should not be taken out if we do still want to continue higher. So in this price action, this is not super high probability until we get this new fair value gap right there. That is when we can expect high probability conditions again right there. Then after, or actually before, right here, we see this 15-minute fair value gap right there. And we see the same thing, high close right there. Next candle should sweep, should continue lower right there, at least be a down candle. And the expansion phase of the new fair value gap should be created in the coming few candles as fast as possible. That is important. I'm going to keep on repeating that to ingrain it into your mind to see those high probability conditions. It's very important. Here we have this 15-minute fair value gap right there. All right, we do not sweep that previous candle low, but we have an up candle. Nice. If we have that up candle, then the next candle should also be an up candle right there. Perfect. After, we just continue higher towards the highs as well. Fair value gap right there, fully disrespected. Okay. This is not a low close, anything, is just a complete disrespect, creating a new bearish fair value gap. Good indication that we might want to continue lower actually. And if we go over every fair value gap, then you can see it happening over and over and over again. And when we train our eyes to see that, then good things happen because we know which probabilities we actually want to look to trade, which is very important. 7 minutes until we have this candle close, the down candle close right there. Then once this candle closes, the next thing we would want to see is also a down candle. If this already creates an expansion phase, could already be quite interesting. But the next candle should also be a down candle if we want to continue lower. And if it doesn't happen, that indicates again low probability conditions, but also that we might actually want to continue higher instead. So if we take a look at EU actually, and the reason, or well, here we had quite a big rejection already. Right there at the top, the long wick that we're seeing. So is it high probability for the next candle to stay exactly above this first candle high and creating a next fair value gap? Well, I would argue the longer the wick right here and the bigger the rejection lower already, the lower the probability it is for it to actually create a 4-hour fair value gap higher right there already. And the reason for that is simply said based on overall probabilities. Why? Because the bigger the expansion phase, the more likely we are going to create a fair value gap. And the smaller the expansion phase right there, the less likely we are likely going to create a fair value gap higher right there. And that's, again, pretty logical, but the important thing to understand right there is that if we do come into those levels, into that high right there, then eventually we might actually want to look at shorts right there to continue lower off of. So then the down candle closing right there of the 50-minute fair value gap right there, and eventually a new 50-minute fair value gap being confirmed in an ideal world, then that could be a great indication that we actually do want to continue lower overall. So before we move on, I want to actually see if there are any questions on this. Let me see. If I may add, I think Euro CHF on the 4 hour is a good case study for this as well. Thank you. We can take a look at that. That answers my question about how many candles do you wait until you invalidate the trade ID. So if you are already in the trade and you see it not playing out with the expected candle, you would close the trade then? That's a great question. And no, no, you would not close the trade. And that's weird, right? Because I mention always the high probability conditions and what you want to trade in. And I would not close the trade. And the reason for that is because when we are looking to actively manage a trade, as in risk management, we are already in the trade itself, then I would not all of a sudden close a trade if I do not see those rules. I might move my break even, my stop loss, etc. But when we are in a trade, we are highly emotional, meaning that we might not see actually for an objective reason what actually is happening in the chart. So the odds of us, the risk of us micromanaging and doing something that we should just simply not do whilst in a trade is very much there. So that is why I would not actively look at that when I'm in a trade, which is a bit contrary to what I just said, but that is very important for me as well, where these rules are simply for me to get into a trade in the first place. And when I get into that trade in the first place, then I just simply want to let it go, if that makes sense. Now, let's say we are close to the target. So let's say something like this. We are in this trade and we have the target a little bit higher. And all of a sudden we are currently getting these signs right there. Then I would just go break even, if that makes sense. All right, then let's look at Euro CHF right there. Euro CHF. I also wanted to look at Bitcoin, by the way, because it's also quite interesting. Euro CHF on the 4 hour right here. Yes, this is really interesting case study. Thank you, Zeus. Thank you. Really nice. Let's actually take it back a little bit more. Let's go over the higher times as well, of course. Can't ignore everything right here. Monthly, quite nice formation to continue lower towards that monthly low right there. Weekly right here. We have this weekly fair value gap, which we did not respect, but we came into the overlapping parts right there. Order block, nested order block inside a bigger mitigation block as well, which we can head lower from. And overall, we had quite nice price action here on Euro CHF. Did not create a daily fair value gap lower. All right, bit of a shame. It is what it is. 4 hour right here. What are we seeing? 4 hour, we have this 4 hour fair value gap, which is already continuing lower. Perfect. Creates very fast. Perfect. The faster we create a new fair value gap lower, the higher probability it is, of course. So here, we create a new fair value gap immediately in the same candle right there. A new expansion phase lower. Afterwards, we come back into this. Quite a high close. It's an up candle. All right, we do not have a huge rejection relatively seen to the overall candle right there. Perfect. So we can sweep this to continue lower off of that. Now, if we want to be bearish, what should be avoided on bullish price action? Meaning that what are the overall bullish signs that might be created that could indicate that we do want to be bullish? Well, that is if we create a fair value gap sitting right there. So that's the only thing that we have to take into account, that in 1 minute time right there, we might actually create a bullish fair value gap on the 4 hour right there. Very important, because then we have to play with the rejection as well, where in this 4 hour candle, we have 4 hours to trade into this level and to avoid a rejection area. And a rejection area is simply said just a fair value gap right there, because that is a discount rate. That is where price can potentially reject off of. So that did not happen, making the price action a little bit more difficult to navigate. So if we dive into the 5 minute actually, let's see, what are we seeing right here? We have a nice continuation lower overall right here although we do not have any trades back into a fair value gap. And this is something that we are going to go over as well, and I can already briefly touch on it right here. When we have fair value gaps going in one direction, the first fair value gaps that are being created like this, just because we have a lot of fair value gaps going into our direction does not necessarily mean it is high probability. When we have the first few fair value gaps being created and we trade back into them and we create new fair value gaps lower off of that, so what would that look like? Like this, and then we continue lower off of that, creating new fair value gaps. That second leg is high probability. The first leg is often used as well as manipulation, where just because we have fair value gaps does not necessarily mean it is extremely high probability to trade into that direction, right? That's something we need to understand, because this could be seen as an extremely high probability sharp turn right there. But I would argue it can also be used as manipulation, where all of a sudden we get higher prices right there and we take everything out. Let me see if my chart wants to work. It's a little bit laggy. All right, can we continue higher off of that? All right, there it is. So that could happen. And the reason for that is because we never respected a premium rate. So we never got a sign right here that we even respected a premium rate in the first place. So if we never got that sign, that even though we have fair value gaps going lower, it's very important to understand that, am I lagging in the Discord? So right here, what I was saying is that, again, since we have never respected the premium rate, it is bold of us to assume that this is high probability conditions. Once we respect premium rates, that is when we have high probability conditions. Very important to understand. So currently we have a 4-hour fair value gap to work with right there. So let's actually see what we do want to do. And in an ideal world, what we do want to see right now is, of course, on a 5-minute, we want to see if we want to continue higher, respect of bullish fair value gaps, disrespect of 5-minute bearish fair value gaps. Again, with the rules on when we can expand lower, etc., or higher. And if we want to see lower prices, then that huge lag that we saw lower on the 5-minute, ideally we want to see a retracement, because we are likely going to get a rejection of the 4-hour fair value gap somewhere in that lag. So the good test to see if those 5-minute fair value gaps are high probability is to see, once we have the rejection here on the 4-hour, if these want to hold right there. And in the meantime, I simply want to wait right there. Then if we go over a few other pairs, I also wanted to go over Bitcoin, because this is also quite important to understand. And right here on Bitcoin, we have an ST, a beautiful sharp turn right there actually to continue higher off of. Now, if we fully dissect this again, this is ideally what you would want to see right there. And a sharp turn, the higher probability a sharp turn is, I stated earlier, or I stated in a lot of enrollments actually, that when we have a perfect overlapping fair value gaps right there. So when we have a balanced price range, as you might know it right there, that is the highest probability sharp turn. And I do agree with that still, but I also like the fact when we already have rejections off of the first side of a sharp turn, meaning a bullish sharp turn right here. Once we have this bearish fair value gap, we already get rejections right there of the bearish fair value gap. And what we see is this candle right there. The next candle should be down candle, which we get. Perfect. After that, we get an up candle, meaning the rejection here of this bearish fair value gap already happened. So that makes the bullish fair value gap even stronger, because there is no bearish fair value gap or anything in play anymore. It almost clearly shifted right now to bullish price action. And the shift is noted by the rejection that we had right there. So I do quite like that. Afterwards, we create an ST right there, a sharp turn, and we create this bullish fair value gap. Now, it is quite important to understand that not every fair value gap right there will get traded back into. And the reason why is because the first line of defense in the leg higher is this breaker right there. That is the highest discount array that we can continue higher off of, meaning the price has the probability of not coming back into that fair value gap because it's already rejecting off of the breaker right there. So if you were to enter this, then the entry for me would be on the first line of defense right there instead of the fair value gap. Now, it's important to understand here that when we do continue higher off of this breaker already, and we do not have a visually clear retracement into that fair value gap to continue higher, we do not have a new swing low, I would still want to see a new fair value gap being created right there. A new daily fair value gap being created off of that. And the reason for that is because if we already expand and we all of a sudden right now have a retracement right there continuing lower, that is still very heavy retracement in order to continue higher afterwards. So in high probability conditions, I want fast price action, meaning a big retracement is just not something that I would want to see in high probability conditions. It should all happen very, very fast. So that's something quite important as well. Then I also wanted to take a look at crude oil really quickly. My mouse is a little bit laggy again. Let me see if I can get to it. Perfect, there it is. So right here, on the monthly, we are inside a monthly fair value gap. We actually have a very nice rejection. So when we have this nice rejection and 1 day and 8 hours right there, then the next candle, the next monthly candle, is where we would ideally want to see a down candle. Right there, especially since we already have a nice rejection right there with a pretty long wick on the top. If we do close exactly like this, if we do not close exactly like this and we have a higher close, of course, changes the situation. But if we go into the daily, then what do we want to see actually here on the daily of this monthly fair value gap? Well, first thing, it's quite important to understand whenever we come off of any PD ray, the first thing we encounter is resistance. It's the same what happened on Bitcoin with the daily fair value gap lower right there. As the first part we run into, that's resistance. So let's say in this area, right there, in these first few candles, you already took a 1 hour trade. Don't get me wrong, that could be a great trade, but just know you are going to run into resistance. So the risk management is going to be a bit more difficult. It's going to be a lot more stressful as well because you feel like, oh, is this going to take me out? Is it going to run? It's important to know that we are simply said running into resistance as well. So what we can see afterwards on crude oil right here is that this first area is simply said again resistance right there. So when we run into that resistance, it's also a great indication to know if we actually want to continue lower or want to continue higher. Because if we want to continue higher, we will continue higher off this daily fair value gap. If we want to continue lower, we will slowly start to disrespect this daily fair value gap. Monthly fair value gap will start to hold slowly, and then eventually afterwards we start to get the fast price action. And that's quite the way I see it is quite logical, and I'll try to explain it as best as I can. When we come out of any PD rate, the first thing we encounter is resistance because we have been bullish. For all this time we have been bullish, and all of a sudden price is now demanding for it to switch bearish. The transition from switching to bullish to bearish might take some time. We do not always have a perfect sharp turn and a clear indication that we want to continue lower. So the retracements happen at the first moment right there. That's why on Euro CHF, I do not necessarily like when we already continue lower and have price action like this. Boom, just continue lower. Because that would indicate to me we never had a retracement. So why did we never had a retracement? Then I would see this as a huge retracement to still continue higher, if that makes sense. So in the transition from switching to bullish to bearish, we have rejections, we have retracements. And after we have those and we can continue lower, that is when we have the fast price action. So retracement, boom, fast price action. Only fair value gaps being respected right there to continue lower towards the draw on liquidity. The bigger retracement happen in the beginning. That's very important. So let's actually see and dive a little bit deeper into this price action, see what is happening. See in the 4 hour, what is happening on the 4 hour? Nice rejection as well. We have a 4 hour value gap sitting right there, which is definitely something we need to take into account. Nice sharp turn overall. And will be a great indication once we do come back into a sharp turn right there, into the breaker. If we create a new fair value gap lower off of that, that will be a great indication if we want to be bearish. and also disrespecting then the daily fair value gap automatically, of course. On the 1 hour, let's see. 1 hour, this is also what we talked about. It's just fractal. What we are currently running into is the first sign of resistance right there for bullish price action. So we have been bearish on the 1 hour. If we want to transition right now to bullish price action, then we want to see the disrespect of bearish fair value gaps right there on the 1 hour. So this is the first area where you can likely see the most rejections, the weirdest price action. And once that is over with, then after we can see the high probability conditions return to the market. So here it is quite interesting to see what will happen and which fair value gaps will be disrespected and which ones will be respected. Currently, it might seem that we are disrespecting the bearish fair value gaps slowly right there. We still have some time to go, so it's too early to actually get to a conclusion. But it will be very interesting to see what we do want to do right here. If we want to see the monthly fair value gap following through, this fair value gap should not hold right there. Then if we take a look at NASDAQ, right here, NASDAQ and ES, almost equities open right here. NASDAQ and ES is a little bit different. And the reason I state that is because right here we have this fair value gap, for example. And this fair value gap, we would indicate, or we would say based on those rules currently, that it's not likely that we are going to continue higher off of that fair value gap. If we are not likely to continue higher off of that fair value gap, then what are we reaching for? Likely another discount rate in the form of those highs right there, the overlapping part, to then continue higher off of that potentially. So instead of ignoring the whole fair value gap right there and sort of stating, all right, we are continuing lower, just fully, no, we might come into the overlapping part first to then continue higher off that, especially since NASDAQ ES has equities open. So they have a big time factor coming into the market as well, which is important to understand, which is why we do not necessarily expect it already to reject right there, because time is not agreeing yet. Also very important. Let's look at EU and see if we have some more price action to deal with. We have a nice rejection higher right there actually after coming into the 1 hour overlapping part, which is quite interesting, because right now this is of course a great indication that bearishness is not in the market anymore, because this simply said should have also been a down candle right there if we wanted to continue lower. So in this case right here, this is also a great indication to unusual context. And what I mean by that is once you get this rejection, something like that on EU or whatever it may be, it's a great sign for unusual context to find your usual context to continue higher off of that. So for example, 5 minutes, even the 1 minute fair value gaps right now, 1 minute order flow is actually already confirmed. 1 minute fair value gaps right there to follow through towards these highs right there and towards new highs right there as well. That could be very interesting eventually. This is a little bit more difficult entry, and the reason I state that is because when you want to enter off a 1 minute fair value gap right here, it's likely going to have some risk management like this, where it's almost not even a 1-to-1 when we want to target the highs. So that makes it a little bit more difficult. So in that case, 5 minutes could be a little bit nicer for the fair value gap right there, but then you might miss the move. So it's all considerations that we do have to take into account. So even though you would want to see a big retracement right here for potentially us to get involved right there, a big retracement is also not beneficial. So again, that makes the price action right here a bit more tricky to enter. So the solution, it's still quite a tricky solution, would be to enter off of this fair value gap right there. Try to narrow down your stop loss as much as possible without killing the trade ID, if that makes sense. So right here could be this breaker, for example, right there. That would be that's something I sometimes do. In a rare occasion like this, I would cover the breaker right there instead of the swing lows in the recent leg. I would cover the breaker. This is the bigger breaker, last up move before we had the down move, before we had the up move again. And this would be the breaker. We should not come back below that based on liquidity as well. Because if we come back below that, we are releasing trap traders. We can say, all right, we are simply wrong on the ID. So we can already say that we are continuing lower. Currently, I want to look really fast at this price action right here. We need to understand here, we are creating a 5-minute fair value gap so as well. So it's quite important to understand that we might actually consolidate here. So if we get a consolidation, it's not that crazy. We still have a 5-minute fair value gap in the making. But on the 1 minute, we have this price action, exactly what we were talking about. First candle rejects. Next candle is likely going to close as an up candle. So the next candles is, in an ideal world, also up candles to create new fair value gaps, 1 minute fair value gaps higher off of this 1 minute fair value gap right there. If that does not happen, then my mind will go to, all right, we are creating a 5-minute fair value gap, which we can continue higher off of. If that does not happen and we get the same signs on the 1 minute that we do not want to continue higher on the 5 minute, then that would indicate that we do want to continue lower eventually. Let me see. All right, let me see on the 1 minute. The next candle ideally here should also be an up candle. Again, and we fall back. If that doesn't happen, we fall back. Then our indication would be, all right, 5 minutes fair value gap. If the 5 minutes fair value gap is not getting respected, all right, we continue lower, most likely. And the trade ID right there is just simply said a loss overall. So to actually see, I also, what I mentioned, by the way, let me see. What I mentioned, by the way, in the trade management, I would also not want to actively trade manage this right here to move my stop loss all of a sudden currently because I'm getting scared that it's not up candle. No, leave it open and just sort of accept whatever happens right there. Very important as well. Let me see. If I remember correct, you mentioned in the invalidation setup videos you prefer an ST plus RE and an ST on the time frame above. Is it still accurate to make it more high probability? Yes, to make it more high probability. It's, by the way, when I am looking to get involved in a trade, I do not necessarily look at an ST plus RE and an ST on the time frame above. The only thing is that does make it high probability because you have every time frame agreeing, but it's not something I actively look at. I only look at an ST plus RE if I'm looking to get involved and I want an ST plus RE. And if I want an ST, I only look at an ST, for example. But we can assume both of those things happen. And if both of those happen, then it's high probability. But when I'm actively trading, I only look at one of them. If that makes sense. So let's look at some more price action right here. Now we could assume if this is a down candle right there, we can assume that this potentially wants to trade into the 5-minute fair value that it could create right there. So that becomes quite interesting as well. And if it does not respect that, then we could expect lower prices and the stop loss right there to be hit. By the way, for your information, it is quite important to understand as well, this trade is not a trade that I am personally actively taken. So I would also advise, if you are here in this live stream, to not take a trade or any trade that we take. And the reason I state that is because this is purely currently to learn about it, to eventually take trades on your own. That's very important. So we don't have the wrong mindset and think these are signals. They are not signals. Very important. So if we take a look at other pairs as well, and of course, if it fits into your trade ID right here and your trade ID, not my trade ID, then you can execute it. Bro has a disclaimer voice. I should create a soundboard with a disclaimer. All right, let's take a look at some other pairs as well. GU, we see very nicely actually on the 5 minute. Now, of course, it's also quite important to understand the higher time frame context still, where GU overall was just not very nice because very clearly said here, we are not respecting bullish fair value gaps, not respecting bearish fair value gaps. This is purely seek and destroy conditions right there. Let's take a look at the dollar actually. Dollar is still in seek and destroy conditions, although what we are seeing right here, right there, let's see. What we are seeing, we are having this up candle, rejects already, next down candle, next candle, ideally a down candle. After we have this, in an ideal world, we should currently create a fair value gap as soon as possible. That is what we would want to see. So ideally this candle, if not this candle, ideally the next candle. The longer it takes, the lower probability it is going to be that price actually wants to trade into that direction. I just took a quick winner. All right, nice. On gold actually, nice one. Toulon, the gold master. Let's go, nice, love to see it. Let me actually take a look. Nice one. Nice one. Actually quite nice. Interesting. Nice one. Great job. Great job. All right, let's see. Let's look at some more pairs. Let's see what ES, NASDAQ are doing after. I want to look at NASDAQ as well a little bit right here at equities open, seeing what it wants to do. Could be quite interesting. And this is also quite interesting actually, because here on the 15-minute, we have this fair value gap lower right there. And we have the first candle rejecting. Again, when we reject, we should just, very simply said, we should create new fair value gaps lower as soon as possible, as fast as possible for us to have high probability conditions. So when we don't do that, it also indicates to us that we are not going into that direction. So in this case, we are not super bearish as we expect it to be, because we are not creating fair value gaps immediately off of previous fair value gaps. So that could set up very nicely when we trade into the overlapping part right there, and we get nice price action going higher, because that already indicates that we have a little bit more bullish momentum right there. Because simply said, we are not, or we are struggling to create bearish fair value gaps. All right, on EU, let's see where my stop loss is in a weird position. Let me place it back to the breaker right there. Perfect. All right, so we have created the 5-minute fair value gap right there. Now, of course, it's the question if we do want to trade back into that 5-minute fair value gap, or we already want to continue higher off of that right there. We would have to see whatever price action wants to do. Currently coming into it quite nicely, potentially right there. Let's see. Let's put an alert, and in the meantime, we'll go look at something else again. All right. Let's put an alert at both sides. Or if it does already want to continue higher as well, then we can take a look at it. All right, let's look at DAX actually. Does DAX have something interesting this morning? Let me see. 4-hour fair value gap higher right there, but we did reach the overall targets right there, which is also quite important to know. We did not create a sharp turn though. Did not create a bearish fair value gap, which is also quite interesting. What is lovely DAX doing? Exactly. What is lovely DAX doing? I immediately thought of you, Dom, as well. Let's see. If we can get a 4-hour fair value gap higher again, could be quite nice. This is a bit tricky. And the reason this 4-hour fair value gap is a bit more tricky than previous 4-hour fair value gaps is because we reach the overall target. So when we reach a target like that, and we do respect it like that, there's a lot of momentum coming into it right there. And if I look at this closely, actually, then I believe we already came into it and we continued higher, took out the context again to then continue lower. So that would change the context as well a lot. So let's actually dive into this deeper. 15-minute. Yes, that's exactly what happened right there. So then the story changes, as in the story changes that the 4-hour right there is not great anymore. The 4-hour fair value gap is almost already disrespected right here. So the overlapping part is the next part we can come into. But if we do not respect that, then we can just look to continue lower as well. So currently it's a little bit more waiting right here to get a clear indication, because this is just very 50-50. Let's see. Hands off today and guess see what it is doing until next week. Yeah, very true as well. I like that approach. I like that. Let's see. US dollar, Canadian dollar looks juicy. Weekly order block plus fair value gap. Got a 4-hour steal. Let me see. Let's see. Weekly right here. Yeah, this is quite nice. And I say quite nice. Although the only thing I do not like here, and this goes for fair value gaps, goes for any other PDRA, is when we have that first rejection right there. That first rejection already, next candle should ideally be a down candle. So for it to come all the way back towards the highs, it's quite odd. It's quite suspicious. Don't really like that. Other than that, this right now should also be a down candle. If we do want to continue lower, all right, next candle should just be a down candle. Now, right here, what I do want to wait for on US dollar, Canadian dollar personally is a daily fair value gap, which we can see we have sitting right there. This week time, not the best factor, to be honest. On the 4-hour, let's see. 4-hour, we do have a nice ST as well. We have actually quite a nice fair value gap right there. Overlapping, a lot of overlapping premium rates right there, which we can continue lower from actually. So let's see what we have on price action right there. we have 3.5 hours to come back ideally into this level, because that would prevent another discount rate to be created, which would just indicate that we have overall more bearish momentum in price action. All right, this is very similar to Euro CHF, what we saw actually. And we only have the ST right now currently on the 5 minute. I would want to see a retracement. Ideally just a simple, a very, very obvious retracement, because that would indicate a sign of premium raise right there. If we get a new Verwijgen lower, then we can continue lower off of that. That could be very nice. So on the 15 minute, what are we doing? 15 minutes, potentially already creating ST as well. Could be nice. Let's keep an eye on this. Let's keep an eye on this right here. And then let's look at Euro CHF really quick to see an update. All right. All right, perfect. So this is exactly what we were talking about. And this is where it's quite important to understand that you do not rush into a trade into that bearishness right there. We first need to play the rejection right there, and we get the rejection right there. And here it's simply waiting, because whichever side creates a new Verwijgen gap, a new obvious Verwijgen gap, is the side that will win most likely. Meaning, if we get a new bearish Verwijgen gap continuing lower right there, then the bearishness will just simply win. If this retraces right there to come into that Verwijgen gap, to continue higher, create a new Verwijgen gap higher, then likely the bullishness will win. So very important. Actually, for Euro CHF, I saw there's a 5 minute re after sweeping your previous the previous 4 hour Verwijgen gap high. Would that be something you would take? I know I wouldn't. Let me see. Likely, if I haven't seen it already, then probably not, because if it's not obvious to the eye, then I just don't take it. I believe here, right? This one. Yeah, no, don't really like that. Yeah, don't really like that right there. And I'll also tell you why I personally don't really like that. It's just overall the formation. The formation of the ST is not that clean. The rejection is barely below any highs again. And we do not have a clear retracement into any premium array right there. So to get a clear retracement, I would ideally have Verwijgen gap to then continue lower of that. Yeah, very weird formation. Very weird formation. It's so odd. It's so vague to say weird formation. What do you mean with weird formation? It's just the way this top formed and the way that we are not getting a clear retracement into any premium array. Student is learning well in it. Yes, yes, you are learning very well, Sius. Love to see it. Love to see it. Let me see, Hope. Let me see. In and Q, if it reaches overlap part, it will prevent forming daily Verwijgen gap. So is it a high probability for longs? Ooh, that's actually something I did not look at. That is a good suggestion, actually. Let's see. That is actually a very good suggestion. So is that a high probability for longs? We would have to see if it does come into that right there, how it reacts. In the meantime, if we already continue higher right here off of any other Verwijgen gap, then we can still look to take that, because then we have the premise, all right, we are creating a daily Verwijgen gap higher as well. So that's actually a really good one. It's a really good one. I'm happy you pointed that out, because that's very important to take into account right here, where we would require a little bit more price action here on the 50 minute to tell us what it actually wants to do. Because here, if we now disrespect everything, we come into here, we disrespect everything, then I would still say, all right, we might actually want to continue lower instead. Let me see. Bro, we have a clean setup on US dollar Canadian dollar, but tomorrow's FOMC, but today we have clean time plus price in alignment. Is it even not high probability trade, or is it low probability because tomorrow? Yeah, everything, and I didn't even state that yet, but even EU right here, US dollar Canadian dollar as well. This currently is for me low probability, and simply because of the time. So I know, price action is looking very nice. I've been there before where price action looks very nice, and I'm so tempted to get involved in price action, but it is low probability, yes, because we have FOMC tomorrow. So where price action looks nice, oftentimes it just isn't nice, and it just doesn't follow through, or some weird behavior, something in forms of that. So it's still low probability for me. Yes, correct. Yeah, exactly. Time is not agreeing because of FOMC. Yes, exactly. Let me see. On AQ, if we tap into the overlapping, yeah, exactly. Pinch poke you, Omikook. Yeah, exactly what we went over. It's actually a really good one. I missed that one. It's a really good one. Learning well. Oi. Deafening sound of. I'm not sure if everyone heard that, but I believe the recording did. Yeah, that's that's an alert. Make sure you hear it, right? Oi. That hurts. All right, so we already have the move higher right there of what was it, the 1 minute, and then actually not the 5 minutes. So that is quite interesting right here. And this again is quite important to understand. Again, the risk management we would want to go over right there is if we see price action like this when we actually are already in the entry, then we need to understand we don't want to micromanage that. So we just leave it for what it is. All right, let's see. This would ideally be a 1 to 2. Now, this is quite interesting again, because now how we close above this high determines again if we do want to actually reach that 1 to 2 right there. So it's also quite important. So we can still monitor that. Let's see. That sound was your TP alert. I did not take this trade, by the way, just to clear it up. I did not take this trade because time is not agreeing for me, etc. I just didn't take this trade. Let me see. So I have a question. For example, gold. Let me see. Gold is currently pushing into an old 4-hour value gap. Is there a way to use that as a sort of resistance turn support type of thing? Let me see. This one right here. Well, the way we can see that is, and let me state that clearly. Let me think of that clearly. The way I see your question is resistance turn support type of thing. Yes, definitely. And then automatically a lot of people would probably refer to inversion fair value gaps. I would not use inversion fair value gaps. I would look at it a little bit differently. And the way I would look at it right here is this can indeed turn from resistance into support. And the way we see that is by waiting for the rejection. For example, on the 5 minute, we are currently seeing a rejection right there. So these fair value gaps could play out, but just know they are lower probability to actually play out. They might not follow through, might have weird price action behavior overall. So if we get the rejection right there, continuing lower a little bit, does not matter as long as we have some kind of rejection, like we're currently seeing. After that rejection, we might consolidate a little bit. If we get a new fair value gap, ideally above this 4-hour fair value gap right there, then that indicates that that resistance right here in the form of that 4-hour value gap turns into support. As in the 4-hour value gap does not necessarily turn into support, but it is that the bearish momentum has again been overtaken right now by bullish momentum, if that makes sense. So that is how I would want to play those rejections. Everyone enjoyed the alert. I didn't even know you could hear that, actually. All right, let me see. Hiro, does the time concept apply to Bitcoin as well? Whereby, because the news on Friday, the pair is low probability trade now. Yes, it is a little bit lower probability indeed. And the only thing is right here, that since Bitcoin is almost like a position trade right now. So if you were to day trade this, then yes, it's low probability. But for your position trade, your swing trades, anything above the 1-hour trades ideally is still high probability actually. And the reason for that is because NFP, FOMC will likely just follow through on whatever the higher time frame is already doing. So it's very funny actually, because then on the higher time frame, it becomes high probability actually instead of low probability. Or the lower time frame is low probability because it tends to consolidate a little bit more. And you don't really see that on the higher time frame. On the higher time frame as well, your stop loss is not bound for slippage, if that makes sense. As in, if a stop loss gets hit right there, you probably get taken out at the perfect moment. As in, nothing crazy happens. So actually, this would still be day trading low probability. So yes, correct. High probability right now for the high time frame still. HOPD above. All right. There was EU, I believe. You mentioned that, right? It's good to know. Let's see. Interesting right now. Interesting price action. On the 1 minute, let's see. We have very nice close. And when we close like that above highs, clear for value gaps, and that, trust me, when we now make a retracement, to trust the high to continue higher off of that as well. So that's actually quite nice. I do quite like that. Currently wouldn't look for new entries anymore, because I believe this is the last push of volatility that we are seeing right now before we start to consolidate as well, because we're approaching 10 a.m. So that's also very important to understand. It's like power hour for indices, for example. Last push of volatility, and then it just dies down. Needs new energy. There's a way to set up an alert on your phone, because if I set an alarm, it ring only on my computer, and I would like to have it on my phone too. Yes, there is. Let me see. When we add an alert right there, and I click on the alerts, I double click on the alert line right there. Then here we can set the notifications. So I used to do an email as well. Well, I got spammed with emails, don't really like that. Notify an app, so make sure you have the app notifications as well on your phone. Something that I sometimes tend to forget when I'm waiting for an alert. The alert never goes off. I think there's nothing happening, but I don't have my notifications on my phone. And show pop-up right there, play sounds. So I won't play it, but I have this one, the deafening sound. Send email to SMS right there. It's all things how you can change it. Alert shows up on your phone too. You have to change the notifications. Yeah. Yes. Let's see. So EU, it's too soft. Yeah. I'm. I make sure that it's very clear to hear. It's very clear. Tomorrow we have all day Euro CPI news. How we handle that? That's a great question. All day CPI news, actually. Really? Let me check. That's usually when you have that, it's all day CPI news, or it's not clear on what the actual time is, which is also something that happens sometimes, where eventually it just happens to be at a certain time, but they're just not too clear on what the actual time is. Other than that, it's all day German prelim CPI. Okay, no, that's fine to trade. You can just use that as your normal red day news. Yeah, you can just use that as your normal red day news, where it just pushes for volatility overall. Let me delete this before it goes off again. Let's see right here. So this is the same case that we saw actually on the gold right there. Where this is a 4-hour value gap. You would not want to trade off of that, but it is a target. As in, we can potentially expect a rejection right there. And once we overtake it and the rejection is done, that is exactly when we can look to continue higher after that in a more high probability fashion. Where right here, if we were to retrace into this 5-minute value gap, it's not something I would want to take, because we have not experienced the rejection just yet right there. And once we then have the rejection afterwards, we create a new 5-minute value gap. There's no rejection anymore. So this becomes a very easy trade right there after. But this is a little bit lower probability, the first move into the 5-minute value gap. Watching what happens next. Yeah, very important here to see what happens right here. Let's see. Are you saying that you have an indicator that set alarms when a value gap is created? Could you explain how it works and how to set it up, please, really quick? Yes, for sure. To be honest, if I'm being honest with you as well, I tend to always use my own clock. As in, I simply look at how much time there's left. So I know at 45, that means that's a 15-minute candle close. That's also a 5-minute candle close, also 1-minute candle close. So if I'm looking at a certain time frame and I'm looking at a candle close, then I know on the 15-minute, I need to be there at 45 again. So that's personally how I do it. I know you can also use alerts, which I personally do not necessarily use alerts. So if I do state it wrong right here, then please do let me know. I'm not sure if this indicator actually has the alerts. Let me see, or was it a different one? Might have been a different one. This one, FVGs and CEs alerts, simple and efficient method. Twin go. Let me see. All right. Then eventually I believe that this goes off with an alert. I'm not too sure how it actually works right here. We can just, of course, we can try it. Let's see. Not too sure actually how it works, to be honest, in all honesty with you. There's actually the 3 dots. Let me see. Which one? Aha. Okay. Yes, okay. All right. And okay. So thank you, Daniel. So if you go to the indicator right there, I believe then it also works for FEG nephew Sam right there. And you go to the three dots and FEG nephew Sam, no. But the other one, yes, right here. FEG and C is three dots, add alert right there. If we click on that, condition right there, this one. And then if we see simple alert down for VGAP, simple alert up for VGAP, confirmed. So if we create that and then we wait right here for, what is it, a few seconds? Yes, then the alert goes off. Oh my. All right, good. Nice. It's actually a little bit easier than the way I do it. So if you want to use that, then definitely try to use that. I did develop an indicator for that. I see Marcos Cognito. It's free and let you trigger the alerts as you want. Watch the video, explains how to use it on the TradingView page. Oh, thank you for that. Thank you for that. Let me see. I see Macros Cognito. There it is. Oh, nice one, actually. Nice one. Didn't know that. Nice. Nice one. So if you want to use that, you can also use that. Very nice. Thank you for letting us know. I use horizontal raise to on the high or low of the VGAP, then set an alert on the ray. Yeah, I've heard about that as well before. I think it's like it's a very personal preference type thing where I do not necessarily like the indicator right there. So I just use very old-fashioned at what time is a VGAP potentially being created. So here, when we have reached that 4 hour VGAP, again, it's not necessarily something you would want to trade off of, but this is also not necessarily something you would now want to look for a new trade ID right there, because we have reached a resistance target. And that resistance target can mess around with price action right now before we actually continue higher. So if we want to continue higher, ideally a new 5 minutes VGAP or extra confirmation inside those VGAPs would be ideal to continue higher off that. Yeah, exactly, Zolon, exactly. Let me see what is happening on the other pairs as well. We have equities open, by the way. Completely missed that. Equities open is happening. Here on Euro CHF, quite interesting. Let's see what we want to do with the 5 minute VGAP right there. We want to continue higher off that as well. Quick reminder right here. It's almost 10 a.m. So this volatility is likely going to die down really quickly right there. So this is not something I would enter personally, even with time agreeing, etc., because the volatility is very much going to die down there. Let's look at NASDAQ, let's look at ES, etc. Nothing yet much, but there is a great indication that we might already want to continue higher because those VGAPs right there are not creating new 15-minute VGAPs. So it could be a great indication. The thing here, the first thing that I want to refer to in equities open is as well, I want to see a new 15-minute VGAP higher if I do want to trade higher as well right here, just to get a clear indication on what it wants to do. So if this becomes a 15-minute VGAP higher, then the rest of the day, I would look at longs, most likely. Hey, Ario, I know you have explained NASDAQ a few times already. Could you please do a flow trading plan on NASDAQ for today? For sure. No worries at all. Let me see here. So for a flow trading plan, we ideally start on something like the daily. Just know the higher time frame PD rates. So we have this previous week low right there, previous week high as well, which we can potentially trade to. Daily, which a few here actually mentioned, we have this daily high right there. So ideally, we should not trade back into that if we do want to continue higher, because that prevents a daily VGAP from being created. Then on the 4 hour, let's see, we do have the overlapping part right there, but the daily right there is more important, that we do not trade back into that. So in the 1 hour, the 15 minute is where it gets really interesting, because the 1 hour we have this 1 hour VGAP right there, which never created a new 1 hour VGAP lower off of that. Okay, could be a nice bullish sign overall. So let's get more clarity, and with more clarity, let's get some more price action, some faster price action on the 15 minute to see where does the 15 minute want to trade towards. Currently, we see, and we need to trace this back a little bit. My mouse is not laggy. We see 15 minute fair VGAPs right there being respected, eventually continuing lower. Takes a while to create bearish VGAPs, but right here we create a new bearish VGAP. That bearish VGAP gets traded back into. And when it gets traded back into, we do not create a new bearish VGAP lower off of that. All right, So seeing on how long it took to create constant new 50 minutes for gaps lower, and not even creating 50 minutes for gaps lower, after the sweep of those lows right there, and we create a 50 minutes for gap higher right there, I would argue that we want to continue higher as well here on Nasdaq. Currently, there's nothing set in stone yet, as in we have not created a 50 minutes for gap higher. We have not respected anything just yet in equities open. So there's nothing set in stone yet, but we can have a clear, an early indication that we might already want to continue higher right here. So that's how I would view it. Let's see. NQ prevent 1 hour for value create. Yeah, very important as well. News at 10. All right, that's actually a good one. Good one. Thank you for letting me know. Let's see what we want to do then. In about 15 minutes, or in 15 minutes, we will create that 50 minutes for backup higher. If, of course, that happens, then we also have news at 10. Could be very nice to trade into that right there with news to then continue higher off that. Could be very nice. No worries. My pleasure. Let's see. I have a question about NFP. Typically, it does retrace the initial move. I swear I've seen it happen 3,000 times, but I just don't believe it. Yeah, it really depends on the overall context. What happens sometimes on NFP and FOMC and the major news events is that you'll have a huge move higher, and that people think that is the fake move, and then it retraces the whole way, and then it could still continues higher off of that. And that happens quite a lot, and it really depends on the overall higher time from context as well, what it is telling us. But usually it does tend to retrace as well. Yes, correct. Let's see. So of course, this first candle high is quite important currently for Nasdaq. Still 14 minutes for that to sort of survive, to see if it does want to continue higher off of that. In the meantime, let's look at something else. ES. ES right here is where I would argue, and ES is a little bit stronger right here. So if we were actually looking at indices right here and looking at the highest probability conditions without necessarily pulling a biased card, meaning I just like trading Nasdaq more personally, but if we look at it from a relative strength, so which one is stronger essentially, then ES right here is simply very much stronger, where we already have a 50-minute for value gap right there in the making. This is definitely going to create a 50-minute for value gap. We can arguably, confidently say that right here. We already have one sitting right there as well. So at this moment in time, I would prefer trading ES right there. If we come back into a 50-minute for value gap, potentially overlapping with the breaker as well, go into the 1 minute to see what we want to do right there. So this is definitely very interesting right here on ES. Where Nasdaq, we can see a little bit weaker. It's just overall a little bit weaker, probably because we've reached all-time highs. So it's just not in a rush to do anything anymore, where ES still has the all-time highs intact. So it's probably more so in a rush right now to look to get towards those all-time highs, which are right there. Quite interesting right here. All right, YM as well, similar strength. It's in the middle, I would argue right here. See DAX just consolidating still. EU, all right, yes. So this is where it gets interesting right now. Because if you now have 5 minutes for value higher again, then you would want to expect higher prices and sort of see this as resistance becomes now support kind of thing. And Q prevent 50 minutes for value. Yeah, very, very important as well to note. Also, a big shout out to suggesting Magic Keys to me. I'm flying through my challenge right now. Yeah, Magic Keys is huge. I really enjoy it myself. Really enjoy it myself. Lovely tool. Lovely tool. Shame they turned into a monthly subscription though. Yeah. Yeah, exactly. Yeah, from their business perspective, I can understand it. But for the consumer, for us, it's not that nice, of course. It was very nice for 35 lifetime. Was a steal. Next lucky draw should win Magic Keys. I hope so. Let's see. You said that for DAX, we get a lot of volatility at 3 a.m. Can we enter a trade before 3 a.m. or should we wait for 3 a.m.? Let's see. it is very important right here to understand the overall context for that as well. If 2 a.m. and coming into 2 a.m. is already really volatile, then likely 3 a.m. will just respect whatever 2 a.m. already did. If it lacks the volatility and we've not moved away far yet, and whatever it is, then 3 a.m. can take out 2 a.m. As in 3 a.m. is just the deciding factor right there. It's just a stronger factor. And that's the same actually for equities open on ES, NASDAQ, etc. Because right here, usually when you already have news at 8:30, news is again brings in a lot of volatility into the market. So when you already have news at 8:30, something like NFP for example, equities open will just do whatever NFP already did, or it will just continue the move of what NFP was already intending to do. So that is when you can look to potentially enter actually before equities open as well. That's the same for DAX, where if DAX already has some news, for example, at 2 a.m., something like the German market, something happening. And after that, if there's a lot of volatility already, we can already look to trade before it. But as a rule of thumb, if you're just starting out, I would advise to trade only after 3 a.m. And then slowly with experience, you can notice more and more when you can allow yourself to trade before 3 a.m. as well. Just a little bit safer approach right there. Let me see. ES is fast, as in I'm not too sure if it wants to retrace into that 50-minute Verwagen before it already takes out the highs right there. It's very fast right here. Very fast. No worries, no worries. All right, 10 more minutes, and then at 10, I am going to end it as well right here. Let me see what we want to do. NASDAQ, I would still want to wait for any Verwagen higher, Verwagen lower. Still want to wait right here. If I was to look at longs, I would prefer ES right now. And ideally a retracement, but ES is looking very strong, meaning it could already take the highs right there before it even retraces into a Verwagen. So once we do reach those highs, I do not necessarily want to look to actively get involved right there. I would more so want to wait again to see if it still wants to continue higher or if it's not a sweep, etc. Things like that. Then on EU right here. Perfect. This is exactly what you would want to see. So this next 5-minute Verwagen is very nice to potentially take a trade off of right there to continue higher towards a next target as well. That is quite nice actually. Only thing is that time is not agreeing anymore. So keep that in mind as well. And if we do want to create a 5-minute Verwagen, big rejection right there. Let's see Euro CHF really quick as well. All right, do not follow through right there off of that 5-minute Verwagen. So let's see what we want to do right here. We still want to continue higher, continue lower. This most likely is currently just the first sign that we are likely going to consolidate right there because the volatility is slowly dying down. Could you check Euro New Zealand dollar? For sure. If price prevents the formation of the daily bearish Verwagen, can we expect taking the weekly target? Let me see. Euro New Zealand dollar. Price prevents the formation of the daily bearish. Can we expect? Yes, ideally yes, right there. That would be very nice actually, right there. If we prevent this daily bearish Verwagen to be created, that makes the weekly Verwagen a whole lot stronger, right? There's a lot of arguments to go for it then. So right here, it's still in a little bit of a resistance, but less overall. This 4-hour Verwagen to trade potentially towards the daily Verwagen tomorrow right there, that could actually be quite nice. If we do create the 4-hour Verwagen, of course, very important. Quite interesting actually right here, price action. If we get a little bit more confirmation and to continue higher right there, overtaking the daily Verwagen potentially tomorrow could be very nice to continue higher. The reason why your chart is forex.com on TV, I have FXCM. Not a specific reason, it's just what I grew into. And I believe at the time when I started out, I watched ICT videos. And when I watched ICT videos, he always used forex.com. So I also use forex.com. and I just stuck to it right there. It's not specifically a reason why I use it. Sometimes even forex.com, but again, that's picking your poison, sort of the broker right there. Because sometimes forex.com has the setup and FXCM just doesn't have the setup, and you prevent a loss or you might miss a winner. It's just, yeah, it's not really one better than the other in my experience. Let's see. Where's ES currently at? All right. Will be tricky to see right here on the in 5 minutes what we actually want to do right there. If we still want to trade back into the VWAP or already continue higher. Euro New Zealand dollar much prefer 4-hour order flow confirmation, even though there's a weekly VWAP supporting that initial. Yeah, exactly. Yeah, there's a lot of things going. As in, we actually had this question as well in the questions section. Is when I would wait for a little bit more confirmation instead of just entering off of a single per VWAP or whatever it is. If I require an ST or an ST or just an ST plus read, then I expect very high probability conditions. So for example, to enter off of this ST right there on the 4-hour, I would want to see this daily VWAP already closed in, no bearish arguments at all. Where if I do have some slight bearish arguments, then I would want to wait for just 4-hour order flow to be confirmed right there. Hello, Jameson. Hello, Mr. Euro US dollar. Let's see. US dollar needs in 5 minutes. I'll stick around a little bit because we do have news, so it's quite interesting. Let me see. Crude oil. Ooh, look at this. It's I see that as like a person, right? That's hanging by 2 arms. It's getting pulled by 2 sides right there. Like it's a very deciding factor right here if we are going to be bullish or bearish right there. All right, let me see. Crude oil has arrived at the 4-hour VWAP. Equities open has given help up to the price. If I'm not mistaken, the next 4-hour candle signs could be an expansion of it. Let's see. Yes, exactly. So if we want to continue lower, ideally, that next candle could be an expansion. The only thing is that we are stuck between a daily VWAP right there and a 4-hour VWAP. So this very well could continue consolidating a little bit more. So you want to work closely with fair value gaps right here, telling you a clear story. As in, if we want to be bearish, then the 1 hour should disrespect a bullish value gaps right there, continuing lower, etc., to eventually continue lower. So we want to have a clear indication right here. See, Bank Nifty for sure. No, I have not looked at it yet. Bank Nifty. Let's see. Bank Nifty is always when I'm looking at Bank Nifty, but I think it's just my time zone currently. Always when and it's a very small period of time that it's actually open. Always when I'm looking at Bank Nifty, it's closed. Let's see. We are in that daily value gap. So this is actually perfect right now. Because here we have the first candle, which was quite a high close. All right, we swept the candle high. This candle is a down candle. Great sign. So right now, what we want to see is the next candle also be a down candle right there to continue lower off of that. We do have a fair value gap, which is a bit harder to see on Bank Nifty. That is the first resistance we are running into. So here on the 15-minute, ideally, that overtaking that daily value gap to continue lower eventually. It's not the nicest top formation, but if we get the right confirmation right there, continuing lower could be very nice to eventually continue lower as well. If that makes sense. Let me see. Can you be a bit more specific or clarify again on what you said regarding asking for more confirmations? In the example of Euro New Zealand dollar, we can also look at 1 hour ST plus re for entering, correct? And the re leg might take over the daily value gap. But if we are to take over, then we need to wait for the day to close, then it's too late. Yes, correct. That's a great question actually. And I'll clarify on it a little bit more right here. So if we look at the 1 hour instead of the 4 hour right here, let's say the 1 hour ST is currently forming actually, and we create the re as well. So when the re forms, I would want it to, and you mentioned it perfectly actually already. I would, if my mouse is not laggy, please. Where is it? There it is. Perfect. And if we can, my mouse is all over the place. Yes, there it is. All right. So if we overtake the daily value gap with a very confident 1 hour value gap close above that daily value gap, then we can definitely already look to enter that right there. Because then the rejection of the daily value gap will likely just be a rejection to continue higher. But if let's say we have something like this right here, and the 1 hour stops right there, has then a rejection. That is not something I would want to enter. Then I would want to wait for another leg to take over the daily gap to then look to enter it, if that makes sense. So then I would ask for more confirmation in a sense, where if we already overtake it, not necessarily. Perfect, perfect, perfect. No worries. Let me see. 30 seconds before we have news. NASDAQ, not super interesting in my opinion. ES right here is definitely quite interesting. Definitely quite interesting. Let's see what we want to do with news right here. Not expecting a lot of volatility, just another volatility boost that we can eventually just potentially continue higher right here. Perfect. Well, actually quite a lot of volatility. Let's see. 15 minutes for value gap. Let's jump into the 1 minute. If we get something, 1 minute. Let's actually take a quick look at what Nasdaq is doing. Huge move low right there. Quite interesting as well. What's YM doing? Also inside of 50 minutes for value gap. All right, yes. Let's see. Let's see if we can get some confirmation right here. And ideally, the confirmation should, of course, be disrespecting bearish fair value gaps, starting to respect bullish fair value gaps. It's quite important. We have a huge expansion phase after the fair value gap. Again, a situation like this reminds me a lot of Euro CHF, which we talked about. Just a huge fair value gap does not necessarily mean that we are continuing lower. Of course, if we continue lower, so be it. But if we get the right confirmation continuing higher, then that could still be quite interesting overall, because we have never really respected any premium arrays right there. So currently, bullish order flow is more so intact than bearish order flow. Whilst that's quite weird because we do have a huge move lower, but that is how order flow overall works, because we never actually confirmed bearish order flow here on the 1 minute. Let's see what we want to do. Currently does not seem like we want to get any form of rejection. Might want to continue lower right there. All right. If we come back below those lows, then I'm ending the stream right there. And if we create a bearish value gap, then my eyes would not go to ES anymore, but the rest of the day I would be more so interested in NASDAQ right here. Because now we have also prevented a daily value gap to be created. So here we are creating a nice bearish value gap actually to potentially continue lower off of that. I think with news, we are getting a clear indication of where it actually potentially wants to trade towards as well. All right, now if we get a retracement, it will become interesting to see if we actually want to respect premium raise or if this is just manipulation to continue higher. All right. Let's see. Let's see. All right. We have a nice first candle respect right there. So ideally, if it's high probability to continue lower, a new Vervega blower should be created as fast as possible. Where this next candle is ideally a down candle. And then the next candle, it needs to be quite fast to eventually create a Vervega, because that is going to be the highest probability thing to do. An up candle in 3, 2, 1, or an up candle right there. All right, that's not the greatest sign for bearish conditions. In the meantime, it's quite simple right here, because I either want to wait for a bearish fair value gap right there or a bullish fair value gap. And in the meantime, I don't do anything. So either bullish fair value gap, bearish fair value gap, but this is a great sign that we might actually want to create a bullish fair value gap instead. Did we actually come into, it's not even a fair value gap. I saw that as a fair value gap actually, right there. It's not a fair value gap. Sorry, I missed that. I missed that right there. Too much chart time today. I missed that. All right, so we didn't come into a fair value gap at all, actually. Excuse me. Let's see. On EU, wouldn't this be high probability trade when we have Monday high just above our short-term high flow trading plan? Let's see. Let's see. Just below Monday high. Could be quite nice, actually. Could be quite nice for sure. As in bearish, bearish price action or bullish. Let's quickly take a look. Okay, nice. For the last trade. Yeah, yeah. Oh, the last trade. Yeah, perfect. Perfect. Last trade, absolutely perfect. 100%. Yeah. 100%. 100%. For sure. Only thing is, of course, we're being picky. News is not the best. So that's the only reason why, for example, this trade also did not take personally, because news just isn't that great. Overall, what we're seeing currently actually on EU is we had a very small 5-minute value gap, but we did see we had a huge rejection coming into it. So that's again that third candle that we talk about, because essentially on a fractal basis, we are respecting a premium right there and then aggressively moving into that value gap. So here, I would almost favor the lower prices right now, bearish prices, to target these lows right there, because we are not offering fair value anymore, which already had the rejection. We're now seeking liquidity, what I believe. Here, of course, it's also important to understand overall that we are still in seek and short conditions. That's the same for the dollar as well. So it's going all places, where once we arrive at fair value gap enrollment sessions where we actually have a nice trend, it's also going to be different. All right. Do we have something? We have a small 1 minute fair value gap right there, which is quite interesting right here. Could be quite nice, actually. Let's see how we want to react off of that. No 1 minute fair value gap create. All right. All right. Then I'm also going to end the stream here currently. For ES, it's still quite simple. Right here, we have actually come into a Verveilen gap right there. So currently, it's the same premise, where first candle sweep, down candle. Next candle should also ideally be down candle. We should create a new Verveilen gap down as fast as possible. If we do not create that, we might be bullish. This is an up candle, for example. Then the next 1 minute Verveilen gap that we actually create is quite nice to actually look for long trades off of as well right there. So that could definitely be interesting. If you get a 1 minute Verveilen gap higher right now, could be very interesting. So keep that in mind as well. Perfect. All right. Was a 2-hour session. So, or almost 2 hours. So if you want to watch it back, then also take your time to watch it back. Perfect. Thank you, everyone. Have a great day. Trade safe, and I'll see you at the next one. Perfect. Thank you.